All right, so basically what we have here is one of the swing trades I sent out earlier this week. But the point of this live session is is to try to scalp to catch a bigger risk to reward trade. For the swing trades, you just set and forget. You have to be patient. All right, let's see here. All right, so just drop a one in the chat if you could hear me clearly. All right, cool. I don't like paying attention to the chat too much because it's a little distracting. Right now, I'm just gonna go ahead and trade how I would normally trade on a daily basis, like how I would normally scalp the market on a daily basis. And one thing you have to understand is trading could be boring, right? Because you're just sitting looking at a chart. But that's what it takes to, you have to fall in love with it anyway. So let me just break down my scalping strategy for US30, right? It's fairly simple. What I do is basically from 10 a.m. to the end of day, for me, is the best time to scalp US30. And most of the time, you would get the entry around 11, from 10 to 12, or from 2 to 3, right? For some strange reason, that's when the market tends to react to the zone. But other than that, I would just keep an eye out from 10 o'clock. Before 10 o'clock, the reason why I don't trade before 10 o'clock is because based on my experience, the market always stops me out, so my best results comes after 10 o'clock. So even though I might find a trade that is tempting before 10 o'clock, I feel like the market be manipulating before 10 o'clock, or it just don't respect my strategy as accurately on the lower time frame, right? Before 10 o'clock. So one thing you have to understand, whenever you're trading or scalping is simply just trading on a lower time frame, right? So to scalp, what I do is you need to use 3 time frames, right? As with all trading, you need to use 3 time frames. You have your entry time frame, your middle time frame, and your higher time frame. To make your trade higher probability, the key is to try to get all these time frames aligned in the same direction, right? Or you would have, let's say, this is how it would typically go. You would have your higher time frame trending up, and then you would also have your middle time frame inside of that higher time frame trending up. And then you would also have, your lower time frame. Let me do this little trend here. Like something even smaller, right? Now, the key is you have your higher time frame, your middle time frame, and then your lower time frame. The high probability trades comes when the higher time frame and the middle time frame is trending up, but the lower time frame is trending down. And then once the lower time frame switches the trend after it hits a zone and it begins to trend up, and now you have all 3 time frames trending up, that is what I call alignment, right? It just adds to the probability of the trade. And then also the key is to just back test the previous day, the previous few days, to see if your strategy played out and where you would have entered. So if I was to back test the previous days, right? Oh, well, I sent this trade in the chat already. This is a daily sell limit on US30, right? I'll break that trade down right after I'm finished explaining scalping, right? So, and this is a strategy that just came with experience, right? I don't see it being taught online. And this is just like a personal strategy that I use for scalping. So basically at 10 a.m., I would map out the time zone from 10 to 12. That's when I would prefer to get an entry, right? So 10, and I'll do, this is Tuesday, this is Monday. We're just going to look back at the previous day. And then we'll also do Wednesday, 10 a.m. to 12, right? No, this is the time you want to enter the trade. And you want to do a top-down analysis. Now, the idea is you want to know the direction of the daily trend, the weekly trend, and the 4-hour trend. If you know that the 4-hour is going up or the daily is going up, then you know to expect buys, right? You're biased for buys, right? Now, you already know which direction you want to trade. Now, you want to find an entry. Best case scenario, you would enter off a 4-hour zone with a 1-hour zone inside of it, right? The second best case scenario is you enter a 4-hour zone. The third best case scenario is a 1-hour. And then the fourth is 15-minute, then 5-minute, right? Basically, the higher the time frame you could find the entry, the higher the probability of the trade working out. But not all the time, and not every day you'd find a trade with a 1-hour entry, right? So for example, on this day, on Monday, right? When we came into 10 a.m., we assume the market is bullish. So from 10 a.m., I would look to see where's the best place to buy, right? Now, we have this 1-hour zone here on Monday, but the market didn't get down to it, right? However, on the 4-hour time frame, this would have been the 4-hour zone. And this is where the market tapped into, right? The lower the time frame, the higher the risk to reward. The higher the time frame, the lower the risk to reward, but the higher the accuracy, right? No, just because you didn't get you missed the first entry, you just go to once the market established that it tapped into demand, what I would do is I would just go down into a lower time frame and try to find an entry, right? So I would look on the 15-minute, and you have to wait for the entries to come to you. I just keep analyzing zones, demand zones until one taps into it, and then I would enter. But on the 15-minute, we didn't get an entry, right? So we go down to the 5-minute, and this is after the market tapped into the 4-hour zone. If you miss the 4-hour entry, okay. On the 5-minute, just looking at it, you don't see any clear entry areas, right? Well, we had an entry right here, but the market didn't come back down into it, right? And then worst case scenario, I would go to the 1-minute. Okay, so we know for our demand and control, we know the market is expected to go up. So we just follow the market until we get an entry. And here's the thing, right? People would think that you need to get in at the lowest price or you need to get in at the highest price. Really and truly, where you get in, really and truly, where you get in doesn't matter. What matters is the quality of your entry and the quality of the risk to reward, right? So even though, yes, we might miss this trade down here, but this was the 1-minute demand. The market didn't come back to it. This was 1 minute demand right here, right? At 135. Basically, we have a rally-based rally that took out this previous zone. So this would have been the entry, right? Now, I look at these trades and I take these trades, but these trades he can't send us signals because as soon as you send it, as soon as this trade was validated, it activated 3 minutes later. And most people won't be able to see the trades in advance to be able to set the limit, right? Now, after this high was broken, this was your second opportunity to enter right here, right? This 1 minute demand. You could have gotten another entry here. And then once this high was broken, this was the next 1 minute demand responsible for breaking the high. And you could have gotten another entry here. So my favorite scalps is once the market reacts off of a 4 hour or 1 hour zone, you simply just look for an entry on the lower time frame on a valid supply and demand zone, and you could get a big risk to reward, right? Preferably a 5 minute and 15 minute entry, but if the market is moving very quickly, most likely it's not going to pull back to 5 or 15 minute, and then you have to go to the 1 minute, right? So that was Monday. So this is Tuesday, right? And don't worry, we're still gonna get a trade. Most likely, we tapped into daily supply up here. So once the market starts to come down, we would look for a lower time frame entry to enter to continue, right? But most of the time, it starts dropping or it starts reacting at around 11. So Tuesday, 10 o'clock, right? This is 10 o'clock on Tuesday. This line right here. Now, let's pretend none of this happened yet. And then it's Tuesday at 10 o'clock and the market is right here. What I would do is we already established that it's bullish. I'm looking for an entry on the 1 hour or the 4 hour. So I would go to the 1 hour, and this was Tuesday at 10 a.m. And I'll be like, okay, interesting. We have a rally-based rally. Remove this previous high on the 1 hour. So boom, we have 1 hour demand, right? So now go down to the 15 minutes. 10 o'clock, we established that the market is bullish. Now we have 15 minute and 1 hour demand in the same location, right? So what I would do, the market would be here at 10. I would just set a buy limit and target, 1 to 3 or 1 to 5, right? So that would have been the Tuesday trade. Simply just knowing that the direction of the higher time frame. And then at 10 a.m., you just look for a 1 hour demand zone if you're bullish. If you can't find a 1 hour demand zone, then you drop down to the 15 minute. And then from 15, you could go to 5, and then from 5, you could go to 1. But obviously, you want to stay on the highest time frame, right? Now that's for scalping. I have another strategy for day trading. I might go through it. So we're at today, right? This is today. So today at 10 a.m., right? Wait, no, this was Wednesday. Okay, so Wednesday at 10 a.m. Wednesday at 10 a.m., I wasn't looking at the market. So I wasn't available to take any of these trades. But let's see what would have happened, right? So this is Wednesday at 10 a.m. Wednesday, 10 a.m. This is your 1 hour zone. Rally, base, rally, right? So this would have been your 1 hour demand right here, right? This is your 1 hour demand right here on Wednesday. It was created Tuesday. right? Now, on Wednesday, we have this 1 hour demand right here. We have it mapped out from the previous day, and then 10 o'clock hits. So at this candle right here, this is 10 o'clock. So at 10 o'clock, we look where's the best area to enter. We map out our 1 hour demand. Oh wow, look, the market came down, tapped into this 1 hour demand, right? If we mapped out the 15-minute demand, this would also be 1 hour and 15 minutes. So this would have been the entry for Wednesday. And if for some reason you miss the trade, then you just drop down to a lower time frame and you look for an entry on the way up on the 5 minute or the 15. So nothing on a 5. Once the market taps into the 1 hour demand, now you look for 1 minute or 5 minute entries, right? So the market coming up, you have this 1 minute, it didn't get tapped into, right? That took out this high. Now we have this one right here that took out these highs. It got tapped into, right? Now we have this one right here, rally base rally, that took out this previous zone. It got tapped into. And now we have, this rally base rally that took out this high. So, I mean, to put it into simple terms, at 10 a.m., look for a reaction of a 1 hour demand. You could enter on the 1 hour demand. If you miss it, you drop down to the lower time frame and you just try to get in to a retracement back into a demand level on the lower time frame, right? In order to validate a demand level, the level need to accomplish two things, right? It could be a rally-based rally. Once the zone remove a previous high and the move away, the extension is at least two times the base, then it's a valid zone. So for example, this base here was only one times the size, right? It's a small, it wouldn't be valid for me, right? But, and it removed this previous high. It did work out, but I wouldn't consider it a high quality zone. Maybe I would risk less. Now this zone, rally based rally, right? If we measure it, the impulse away and also took out these previous zones, the impulse away was 6 times the size of the base, right? Rally base rally, and the move away came up to 7 times the size of the base. That signals a lot of strength, right? And you could see, how valid, the move was. The move, it practically ran 1 to 20 or something, So, but obviously you could settle for 1 to 5, 1 to 3. Right. So let's go to today, right? So as you can see today, what I did was, and if you look in the signal chart, you would see the signal. 10 a.m. came. This is 10 a.m. right? Before 10 a.m., I already saw this was a 1 hour demand right here. So if the market came into this demand zone, which was a signal I sent, I would have taken the trade. But, not every day you're going to get a reaction to the zone. The market didn't come down and react to the zone, right? And usually I have like 3 US30 charts because I like to reanalyze and reanalyze. So on this US30 chart that's already been analyzed, right, you would see I have for Monday 4 hour demand take control. Tuesday, this 1 hour demand reacted, created a new zone. Wednesday, the market came back, reacted off this zone and created a new zone. So for example, on Tuesday, we had a zone created, right? The market came down, tapped into it, moved away, created a new zone. And then on Wednesday, the market came down, tapped into that zone, created a new zone, right? And reacted. But I, today I wanted the market to come down to this zone and go up, but it just went straight up, right? So let's deal with the current situation. Right. So this is the current situation right here. We have this is where I'm expecting the trend to reverse, right? Because this is the daily supply zone. Now, basically on the daily supply, right? Overall, the market was bullish, but from May 24th to now, it's been bearish, right? So this is the daily impulse down, and this is what I'm hoping to see, right? For it to come down. We have a trend line break, which is one of the tools I use to validate my zones. And then we have this daily demand right here that the market has not yet tapped into, right? So this daily supply removed this previous daily demand right here, and this is what makes it valid, right? So because this previous daily demand was removed right here, this rally base rally, and the market came down and it did not tap into this zone, so this zone didn't get the chance to take control, we could assume that, the daily supply still has some strength, right? We could still assume that there's sell limit orders and, the higher time, the bigger boys is placing trades here to come down to this zone, right? And, you know, from daily supply and demand zones is the best place to enter. After that is 4 hour, then 1 hour. The lower you go down in the time frame, the less accurate the trades is gonna be. So, I've already placed a sell limit here. But this when you're on the daily time frame, it takes time for the trade to play out. So, and when it comes to scalping, the best trades is continuation. So to scalp a reversal here is gonna be hard because the market would you might think it reversing and then it comes up again and then it comes up again and then it comes up again and it finally reverses, right? The best scalps is continuations. So you find a market that's already trending like this, and you just simply get in, into the retracements while it's going down, right? The reason why I was buying with this move up is because yes, I understood that the daily time frame is down, but I also understood that the 4 hour time frame was up. So as long as 4 hour demand was being respected and 4 hour supply was being disrespected, I would continue to buy, right? But now we've gotten to a higher time frame zone, and I know that the 4 hour cannot compete with the daily time frame. So that's why I would choose to end, the buying unless this daily supply is removed, then I would consider to buy again, right? Okay, so when it comes to scalping, we need to see before we could look for sells that would not be high risk, we have to wait for the lower time frames to take control, right? Right now, yes, we're reacting off of the daily supply, but we don't have a 4 hour trend yet, downtrend. We don't have a 1 hour downtrend yet. We don't have a 15-minute downtrend yet, right? Yeah, we could probably get into a trade, but the odds won't be with us as much as it could be if we was, a little more patient. However, we took a swing trade already, right? Because this was the sell limit and this is a swing trade. No, this trade, you just have to be patient. But if you want, a quick trade, a scalp, you have to wait for the right scenario, right? So what I would do is you need to wait for at least a 15-minute break, a structure, I'll change a character, a 15-minute zone being removed. Let's look for the most recent valid 15-minute supply demand zone, which would be this zone right here. So it's the last 15 minutes demand zone, right? This zone took out these previous highs. There's no zone inside of here because this is just noise, and we could see the reaction was valid, right? So once this zone is removed, this would validate US30 sells 15 minutes time frame and lower, right? So probably you would be looking for sells for the next 7 days, right? And let's look for the most recent 1 hour demand zone. This would potentially be this is the current 1 hour demand right here that was not traded into yet. Once this candle closes, this 1 hour candle closes without coming down here, then this would be the most recent 1 hour demand, right? So once this candle closes without tapping into this zone, because in order for a zone to be valid, you need to have a base, a move away. You need the market to stay away from the zone for at least one candle, and then it could come back, right? But if it could just come straight back into the zone, then the zone won't be valid. Now, if in the next 26 minutes, the market closes up here, then this would be the next 1 hour demand zone. And we would just need that zone to be removed to keep looking for sells, right? But let's see if we could find an entry on the 1 minute. Let's assume the daily is in control and we find an entry on the 1 minute, right? Okay, so 10 a.m. was right here. The market came in, tapped into daily supply, right? Removed this 1 minute zone, this 1 minute demand, right? Came back up, tapped into this 1 minute supply. Okay, now we have a new low. Market came down, remove this this zone. So this would have been the entry right here. Now let's look. As long as the market doesn't tap into this area, we could still look for 1 minute entries, right? So here we have high, low on a 5 minute. Nah, nothing yet. Let's try the 3 minute. Sometimes I would use the 3 minute as well. All right, so nothing yet, right? As much as I would like to take a trade, this is not the conditions to take a trade in. Once this zone is removed, we might get something like this, right? Remove the zone, and then now we enter up here to go short. Because we're currently creating a new 15-minute supply, right? This would be 15-minute supply right here once this low is taken. So once the market makes a new low, this would be the 15-minute supply. This would be considered the market tapping into daily supply and giving us 15-minute confirmation. So this would be the 15-minute confirmation zone. Confirmation is simply when the market shows you evidence of demand failing and supply now taking control. Because when it was in an uptrend, demand was being respected, supply was being disrespected. But now when it's in a downtrend, demand will be disrespected, supply will be respected, right? So we'd obviously wait for something like this. And I would expect, we have the whole day. I mean, we don't have the whole day on Zoom, but I would update it in the Telegram chat. Now, these technical analysis is the easy part of trading. Winning the trades is the easy part, right? Anybody could analyze the market and place trades. What makes you profitable is how you execute the ideas, how you react and manage the ideas, right? How you manage your risk. If you could keep your risk fixed and making sure that you always take trades that make sense, right? Because if the market violates you, sometimes you might just want to take revenge and you end up taking trades that's low quality. So once you could tell yourself the story and you test the strategy out, because don't just take my word for it. Like if you want to use this strategy, back test, go back the last 30 days, draw a line at 10 o'clock and look at how the market reacts to the nearest 1 hour zone and the nearest 15-minute zone. Test it out. Actually, let me show you this, right? Um, I'll show you this real quick. This is how I know the strategy works, right? Besides me obviously using it. But I have different strategies, right? And I would collect data on them. So let's see here. Whenever I place a trade, I would review it, Okay. Right. Let's see here. Now drop a one in the chat if you could see my Discord screen. All right, cool. Right. No, this is my Discord. This is just like a Discord I made to hold myself accountable, right? To journal, to just keep information, right? So here I have basically most of the US30 trades that I've taken in the past at 10 a.m. So what I would do is I would break down the trade, say what happened, 15-minute range, 5-minute range. This one was a 1-minute entry. This was the results. I was like, it's a strong trend set up based on a 15-minute. But let's see. But all of this is the same exact strategy that I was just showing you, right? And basically I documented it, all of it, just to build my confidence, in the strategy. And not much people even looks at this. This is like probably have like 5 or 6 people in this group. I just keep it to hold myself accountable, right? And then I would do, the swing trades as well. But that's the type of stuff you want to be doing, right? Whenever you have a strategy to build confidence, because some people can't execute their trades with confidence because they don't have the numbers. But if you have the numbers, right, meaning you tested the strategy. You've seen, you could look back at the last 20 times you took this trade, or the last 50 times, or the last 100 times. You could see how much times you won. You could see how much times you lost. You could see how much you won. You could see how much you lost. Once you know your numbers, then you would be super confident in executing the trades. You would know, okay, I tend to win this much, so maybe I could risk 1%. Maybe I could risk 2%. Maybe I could risk half a percent. Like if you're very accurate, then you could risk 1%. Now, that's for scalping, right? Sometimes you need to have a couple strategies in your arsenal. If you want to stick to scalping is more stressful, right? You have to spend a lot more time in the market. But I also have a day trading strategy where day trading is much more easier, where you just look at the market at 11 p.m. or midnight. You map out the nearest 1 hour zone in the direction of the trend, and then you just set and forget that trade. And that's the trade I prefer to take, right? Because a lot of the times sitting in front of the computer scalping is gonna lead to you maybe over trading, maybe making an impulse decision, right? Basically, the faster your trades could play out, the more likely you are to make a bad decision, right? Because if you enter a trade, 5 minutes later, it hits stop loss. You could enter another trade. You know, let's say you could enter five, six trades or three trades within 2, 3 hours. You're probably not going to make the highest quality decision. But if you could space out your decision making, then you tend to make higher quality decisions, right? So that's why I like to stick to the higher time frames, because if I could set the trade at night, it activates London session or New York session, and then it closes at the end of the day. Then it just slows down the decision making, and it could save you from miscalculating or making an impulsive decision or jumping in the market too quickly, you know, based on my experience. And also, a good idea to improve your trading is have people look at you trade. So I would have the signal chat that I have. Most of is doing me more than it would do somebody else, because if I only take the trades that I send, I know that I'm only going to send quality trades in the chat. So that prevents me from taking bad trades, because people are looking at these trades, right? So I have to make sure the trade makes sense. So sending your trades for an audience or having somebody else be able to be present in your trading would help you to take better trades. Because sometimes you might take a trade that doesn't make any sense, and you won't realize that trade doesn't make any sense until it hits stop loss. But if you know somebody else is gonna look at that trade and they're gonna be like, nah, that trade don't make no sense, then you're not gonna take a trade that don't make sense. The trade have to make sense. Sometimes you would be on autopilot. It's easy to be on autopilot and just taking a trade because you're bored, and you don't value your risk. You don't value your capital, you know? That's why it's good to be and have a community. Drop out one in the chat if I'm making sense. Drop a 2 in the chat if I'm not making any sense. All right, good, good, good. All right. So US30. Okay, so let me show you the US30 1 hour strategy while we wait for this to set up. Now, if US30 did not tap into this daily supply, I would have considered entering on this 5-minute demand, right? This 5-minute demand, if the market had tapped into 1 hour demand, created this 5-minute demand, this would have been perfect to enter, right? But because the higher time frame is now in control for sells, I would not, can't take it, right? So we have this daily drop, base drop. The market tapped into it, reacted. I'll actually show you my entry, right? Right. So this is my entry, right? Let's see the daily time frame. And I sent this signal out days ago, right? But I don't know, most people, they don't like to hold trades or swing trades. So maybe they don't set the limit. But this is the daily zone right here. I set, a few sell limits, one right here, one right here, one right here, because as the market would have gone deeper into the zone, I would have scaled in, right? Normally I would risk 1%, but I broke up these trades into like 500 each, so 0.5% each. So this would have been, if this hit stop loss and the stop loss is all the way above the zone, this would have been $500 loss, $500. So I risk 1.5%. No, normally I would risk 1%, but because it was a daily zone, the daily zones, they don't come around often. They probably come around once or 3 times a month, and they're highly accurate. So I could risk 1%, 1.5. I really should have risked 2%. But, I had the idea that the market, as it's reacting to the zone, I would enter more trades as it's going down, right? No, you could see this is the entry right here. And look, it was a nice reaction. I would have preferred for the market to go deeper into the zone to activate the other trades. But that's okay, A win is a win. So this is the 4 hour. Let's see. Right. So this was the 4 hour entry on the wick. Let's look at it on the 1 hour, right? Let me delete this one. Right. So you could see, and I always use sell and buy limits because market executions, I feel like whenever I use a market execution, I feel like I'm chasing the market. The market moving and I'm trying to move with it. But whenever I use a sell limit, buy limit is like, okay, I'm picking, this is my entry, this is my entry area, this is my entry criteria, this is the price that I want, and that's the price that I'm taking, right? Is either I'm getting in at this price or I'm not getting in at all. And that just prevents you from FOMO and chasing the market, right? That's why you only see me use buy and sell limits. Because once you're confident, obviously the strategy that is used is tested, right? So once you're confident, then you just set and forget, as they say. So you can see came up, nice reaction right on the daily supply, came straight down, right? Same thing here. If you look in the Telegram chat, you could see I responded to this and I sent this probably Monday. Came up. This was the exact daily zone, but sometimes the market doesn't tap the zone. It comes really close. And then if the zone is really good and strong, sometimes the market, oh, I'm not even sharing this. Let me share it. Right. So if the zone is really strong, sometimes the market comes close to the zone and doesn't even touch it. Right. That's why I like to enter a little earlier. Right. For example, this zone right here, the market came close, but it didn't touch it. Right. And we did take buys down here because, I analyzed this and we had a 4 hour zone right here, right above the daily zone. The market tapped into it, gave 1 hour confirmation, and there was a trade opportunity to buy, right? But right here, we did come into the daily. If I had to draw the daily zone as accurate, it would have been this line. But, just want to enter a little earlier to make sure that we get into the trade, right? Now, this trade, I would just hold it. I'm not risking much, you know. If it comes up, I have one more trade here that's $500. It would enter another 0.5%. So it would be a total 1% risk. But right now it's 0.5%. So if it comes and hits stop loss, then it's, 0.5% plus the other sell limit. But if it continues down, because it's a daily trade, I would try to hold it as long as I could, right? I'll probably trail below or above the 4 hour zone. And it could probably take profit here or it could just keep going, because once when you get a daily entry, that's like one of the best trades to hold. 4 hour entries, 1 hour entries, the market might pull back and take you up. But if you get a weekly zone or daily zone, then like you're with the trend, right? That's the type of trade that someone could hold, and trail. So on the 4 hour zone, we had this 4 hour zone removed. Yeah. Right. So we still have Friday, So once the market comes down, establishes 4 hour, 1 hour downtrend, then we know Friday and for the whole of next week, we just want to sell. And where do we want to sell? We want to sell at 1 hour zones, right? If not 15, if not 4. Um, and a good strategy to use, right? If you're somebody who is busy, because when I approach the market and I send signals, right? I try to put myself in the shoes of someone who has a job and they're very busy and they don't have much time. That's why I try to send swing trades so that that individual could just set their limit on the 4 hour, set their limit on the 1 hour, set their limit on the daily, and come back to the result, right? because how I send the trades, I try to send it as accurately as I try to execute as accurately as I send. So if I send a sell limit, I'm placing the sell limit. If I say I'm closing the trade, I'm closing the trade. Basically the same instructions that I give in my Telegram chat. Once I type it in the Telegram chat, then I go to that Telegram chat and follow those instructions, right? I try to put myself in the shoes of the individual executing the trade. So let's say you're a busy person and you have a life, right? This is a simple strategy that I use whenever my life gets busy, right? I would, and you have to learn to use time. So this is midnight, right? 12 o'clock. You could probably use whatever time zone you're in, but this is midnight, 12 o'clock. This is midnight, 12 o'clock, right? Midnight, 12 o'clock. So the key is to know the direction of the higher time frame trend daily, right? You establish that, okay, the daily is trending up, the daily is removing supply and demand zones. In this scenario, right now, we know that daily supply is in control, so the daily is going to start trending down, right? But in the previous scenario, let's assume the daily is up. All you have to do is when midnight comes around, let's say this is the first midnight, right? Or it could be before midnight, but I like to use midnight. I would just come to the midnight time or analyze the market at midnight. And then I would just look for the nearest 4-hour demand or the nearest 1-hour demand, right? Since we're on the 1-hour time frame, this midnight right here would be the nearest 1-hour demand, right? And then I would just set a buy limit right there and go about my day and hope that the market enters this trade and check back then the following midnight, right? So in this scenario, the market did not tap into the zone. So we come into the second midnight right here, right? Now we know the market bullish. During the second midnight, we see this was still the same 1-hour demand zone, right? Because this zone didn't accomplish anything. So we can't look at that zone, right? So from this midnight, this was still the same zone right here. It did not get triggered. No, you need a little patience because you might only get a trade once or twice, maybe 3 times a week, but it's going to be very accurate, right? So we come to the third midnight, right? Now, where is the nearest 1-hour zone? It would be this zone right here, this rally, drop base rally, right? You have to, if you don't know how to validate supply and demand zones, then sorry for you. But I mean, I have a lot of videos on my YouTube, but all the videos I have is like an hour long. So you can't really talk about, you don't have the, because some people would be like, they want to learn how to trade, but then they want me to give them a video that is 10 minutes long because they have a short attention span, right? No, if you want to learn how to trade, it doesn't matter what attention span you have or how you like to learn. You just have to understand this is the boring information you need to learn, and you need to learn it no matter the circumstance, right? So I do have a couple hours, hour-long videos on how I validate supply and demand zones, identify supply and demand zones, right? Everybody experience with supply and demand might be a little different. So how I do it may be different from somebody else. So, but we have this 1-hour rally base, drop base rally right here, right? And at midnight, This was the best. Let's pretend none of this happened yet. This would have been the best 1 hour zone. So what we would have done, right? We would have just set a buy limit right here, right? Targeting 1 to 3, 1 to 2, whatever, right? So this trade would have been entered and we would have been up. Now coming into the next midnight, right? We look for the nearest 1 hour supply demand zone. It could be 4 hour too, but I like 1 hour better. It would be this zone right here. Drop, base, rally, right? Remove opposing zones. I actually sent this one out, but it didn't get triggered. Sometimes the zones won't get triggered. But this is the type of strategy where you could just set the trade and check back 24 hours later, right? 24 hours later, the trade is either going to hit stop loss or hit take profit. And you just have to trust in the numbers. Now, I've back tested this trade months in the past, So based on the data, I would only get maybe 3 trades, 2 to 3 trades on average a week, but is very highly accurate. And the risk to reward is usually 1 to 3, 1 to 5. In a best case scenario, maybe you get 4 trades, right? Sometimes you might even get one. But if you have a busy life, this is just the type of strategy where you just set the trade and you trust in the strategy and you go about your life, In the VIP group, this is my favorite strategy, by the way, because it fits well with my lifestyle, because I don't want to be glued to the chats all day. I just want to, and my brain works best at night, analyzing the chats during the daytime. There's so many things going on and there's so many distractions. There's people calling you, you have stuff to do. So during the day, I just feel a little distorted, right? But at night, when it's really quiet, that's when, I feel the clearest to analyze and make accurate decisions. So I would analyze, find a 1 hour zone in the direction of the trend at night, send it in the VIP signal chat, and then, go about my day, right? And then, throughout the day, once I have some free time, I could look at other pairs and place, swing trades. But I hope, and this is a personal strategy. I've never recorded it. I've never taught it to anyone. This is just my personal findings, right? So hopefully, you could use it, right? But yeah, and maybe what you could do is back test it. You could even send me a chat if it works for you. Just go back in time, map out midnight. Once you know the direction of the higher time frame trend, draw out the nearest 1 hour zone and off 4 hour, right? And you set your limit, go about your day. Okay, so if we get something like this, boom, boom, that's what we want. And yes, the market might be moving in a particular direction, but one thing you have to understand is your entry is key. Your entry is very important because your entry determines the risk, the reward. You don't want to trade randomly. You want to trade strategically. You want every trade to make sense. You want to be able to write out instructions for your trade that you could give to somebody else and you know exactly where they would enter, right? So yes, this market going down, but I can't just jump in because it's going down. It has to give me an entry signal. It needs to signal me and say, okay, You know what I'm saying? Now it's time to jump in. This is where to jump in, right? And we already analyzed that our entry signal is going to be when the market removes this low, comes up, and this would be the 15-minute entry right here, right? And this 15-minute entry is being backed by this daily supply, which means that, yes, you could get a 15-minute entry and set a daily target. And that really improves your risk to reward, right? Because instead of getting a 1 to 3 on the daily, you could get a 1 to 10 on the 15-minute, right? And obviously, on the way down, the market is going to create new opportunities for valid entries. But, anyways, we're gonna leave it right there. You could stay tuned in the Telegram chat. If I do enter any trades, I'll send it out. And, I hope you enjoyed this live sessions. You could DM me if you need anything, right? Have a good day, guys.